Like the US, Hong Kong is about to list a number of Bitcoin exchange-traded funds, offering a glimpse into the city's efforts to become a center for digital assets. With the spot Bitcoin and Ether ETFs due to go live by the end of April, a number of China's leading asset managers are wrapping up their final preparations. The debuts will probably lead to comparisons with a number of US Bitcoin funds that are 3 months old and have already amassed $56 billion in assets. These funds swept Wall Street off their feet. Over the past year, Hong Kong has been competing with other cities such as Singapore and Dubai to establish a strictly controlled hub for the virtual asset sector. This is a strategy to reestablish the city's standing as a cutting-edge financial hub after a crackdown on dissent diminished its appeal. The degree of interest in the impending ETFs will reveal information about Hong Kong's development. One possible source of demand is the wealth parked in the city by the Chinese, as well as market makers and cryptocurrency exchanges operating in the Asia-Pacific area. According to Rebecca Sin, an analyst with Bloomberg Intelligence ETFs, the funds might accumulate $1 billion in assets under management in a 2-year period. U.S. shadow. However, the U.S.-based Bitcoin funds from industry heavyweights like Fidelity Investments and BlackRock Inc. have already drawn attention and capital from all around the world. Similar brand awareness is lacking for the potential Hong Kong issuers, Harvest Global Investments Limited, the local branch of China Asset Management, and a joint venture between Hashkey Capital Limited and Bozera Asset Management International Company. According to Roger Lee, co-founder of One Satoshi, a network of outlets in Hong Kong that provides over-the-counter cash and cryptocurrency conversions, Hong Kong doesn't have the BlackRock effect to call on. He went on, "We need to adjust expectations for ETF demand to reflect the smaller size of the city's financial sector." In January, the U.S. Securities and Exchange Commission reluctantly permitted ETFs to invest directly in Bitcoin, the biggest digital asset. After a market meltdown in 2022, along with high-profile thefts and bankruptcies, the regulator is wary of cryptocurrencies, so approving ETFs for Ether, which ranks second, will be difficult. On the other hand, issuers claim that Hong Kong has approved spot Bitcoin and Ether funds first. Hashkey Capital and Bozera have stated that the Hong Kong spot ETFs will feature an in-kind subscription and redemption method, which is another distinction. This makes it possible to exchange ETF units for the underlying assets and vice versa, while the US funds use a cash redemption methodology. Opportunities for arbitrage. According to Evgeny Gavoy, co-founder of cryptocurrency liquidity provider Wintermute Trading Limited, the in-kind strategy is particularly appealing to crypto natives, market makers, and digital asset exchanges, since it offers more efficiency and arbitrage opportunities. A Hashkey representative said on Wednesday that trading for the Bozera Hashkey Capital spot products will start on April 30th. 3 crypto futures-based exchange-traded funds, ETFs, have been floated in Hong Kong: Samsung Bitcoin Futures, CSOP Ether Futures, and CSOP Bitcoin Futures. With a total asset value of roughly $175 million, they are far smaller than U.S. products like the $2.5 billion ProShares Bitcoin Strategy ETF, which is based on derivatives. Gavoy stated that it is imperative to have reasonable expectations for the Hong Kong ETF market, particularly in light of the comparatively small size of the region's current futures ETFs. In addition to approving spot ETFs, regulators are reviewing roughly 20 proposals in an effort to increase the number of authorized digital asset exchanges in Hong Kong from the existing 2. The city is also developing a framework for stable coins, which are a particular kind of token that are usually backed by cash and bond reserves and are pegged one to fiat currency. Tailwind rally. It's unclear if Hong Kong will be able to develop into a center for cryptocurrency. The 4-fold increase in Bitcoin since the beginning of the year, which culminated in a record high of $73,798 last month due to inflows into U.S. Bitcoin products, may have provided a tailwind for the ETF launches. Managing director of the cryptocurrency hedge fund, My Capital, Marco Lim, is based in the city and says he receives a lot of questions about Hong Kong ETFs from Bitcoin holders. According to him, several were taken aback by how quickly the products were approved. In China, demand for digital assets is still high despite the country's dismal real estate market and uncertain stock market future. However, mainland regulations prohibit cryptocurrency trading, which forces activity underground. Additionally, the planned fund releases are probably not going to fall under the ambit of a scheme that allows Chinese investors to access some Hong Kong ETFs. According to BI's SIN, virtual asset ETF infrastructure will take time to develop. More players will be able to participate as the ETF ecosystem grows, which will lead to more flows, better prices, tighter spreads, more liquidity, and lower fees.